Welcome to Challenge Forex. My name is Steve and join me today as I go over a trading strategy used for swing trading. This is one that I have done a little bit myself in the past. I have actually traded for maybe 6 months straight using this particular trading strategy, swing trading using daily charts. Mainly because it's easier for people who have a full-time job and they can't sit in front of the computer for hours at a time looking for trade setups, such as day trading. So the reason I'm doing this, I had a follower ask me if I could actually do something for full-time workers, such as swing trading. So thanks, Paul, for asking. And Paul just basically asked, anything for someone working full time would have to be swing traders. Cheers. So I thought, well, yeah, I can actually do something for swing trading. I have actually done some of this in the past, although I don't actually trade this particular style now. I'm only doing day trading at the moment and trading the London session, trying to pass prop firm challenges as many as I can. But I will go through a setup for swing trading, and this is something that I'm not able to do very well on backtesting because it would take hours to actually go through enough trades on backtesting. But I will actually show you the way I have previously done this before. And you only need really one indicator on your screen. So let's get rid of the photo. So the setup that I use is a daily chart. So we can see here we're on Canadian daily. We have 3 indicators that I'm using. You can do this with 1 or 2. It's actually up to you. So I'm using moving averages. And so if you're wanting a long-term trend, you can use a 200 moving average. But normally on the daily charts, I will look at something like a 20 and a 50 moving average, and I'll show you why. You can set up the moving averages as any color you like. So this is 50 exponential. I usually use a thicker line than standard, just so that it stands out easier on the chart and it's easier to read. So with these 2 indicators, I actually look for reversals on a daily chart, and this is the sort of setup that we look at for swing trading. So we want to hold something for maybe several days or maybe even a couple of weeks at a time with the one single trade. So we'll probably have things with bigger stop losses and bigger profit targets as well. But the thing is, you can still do 1 or 2% risk per trade and use this strategy to pass prop firm challenges as well. So looking at this particular chart and where we actually see some setups. So the obvious one here is the double bottom. We can see right back here. This was in September 2024. And the entry point that I'll be looking at for this trading, when I see a double bottom, if I get a close above this apex here, that is a really good entry for a long trade. So we're looking at here, we've got a crossover of the moving averages. You can see here we had a cross down, which would normally signal a short trade. And we could have got into a short trade here as well, but the stop loss would have been 375 pips, and it only went as far as about 140 pips. So we could have, if we didn't move to break even, we could have actually been stopped out on that one. But after seeing a double bottom like this one, it is a more positive setup, especially on a daily chart. We can look at once the price closes above the moving average 50, and when the moving average 20 crosses above the 50, we can look at an entry. Now in this case, the graph is actually, sorry, the chart has actually moved a fair way before we actually got our entry. So that's a 300 pip stop loss there. And if we held it up until the price actually closed below the 20 moving average, we would have made around about 570 roughly pips. And that's over like 60 days. So that's actually holding for a couple of months to actually make a 2% or 3% profit. But okay, but it's good to be winning if you're doing swing trading anyway. It doesn't matter if it takes a little bit longer to get through. But other alternatives for the setup, let's have a look at changing the moving averages a little. So instead of a 20, let's go with a 9. And okay, a 9 and a 20 moving average. And maybe this is going to be a better setup for you for a daily chart. So we can see here we've got our apex, we've got our double bottom. The line here has crossed above both moving averages and closed. Depending on where we got in on which particular day, if you got in a day earlier, you would have had a better stop loss. Let's say around about 150 pips. And the gain, if we held it until we got to close below the 20, if that was the strategy we were using, we would have actually got 740 pips. So that is a much better return. So I'm thinking that maybe the 9 and the 20 moving average are probably the best to look at for this particular strategy. So let's save this as a template and load it on more charts. I'm just going to call this one 2 EMAs template and save that one. And normally what I do is go through a bit more detail. This is only a demo account that I use for setting up my charts and just for testing strategies. But load up each particular pair. To do that, you just right click on each pair on your symbol. You can look at your symbol sets and just say you can do 4x all, but I basically do all of the majors and minors. I don't trade any of the exotic pairs such as Mexican. I don't trade Bitcoin or silver. I do trade gold, but I set up a chart for each one of these and a tab across the bottom and go from one to another to look for setups each day. This way you might not get many setups on each particular pair, but you will actually get a whole bunch of setups overall if you keep it with this strategy. So let's go through and change the template on each of these charts. Okay, templates are loaded on each chart. So we're looking at, I think, around about 28 pairs or maybe 29 if we include gold. And I don't trade cryptos with this, but it is something that you can do if you like. So let's start off with my daily ritual. And this is my version of swing trading. So test for yourself to see if you can be profitable by doing this. I've actually had some really good success with swing trading in the past. I actually did swing trading probably about maybe 3 years ago using this exact method before I started with prop firms. That's when I changed my strategy and started doing more like day trading in the London session. Now, for me, the best time to set up is in the Asian session. Reason being that the markets don't really do much overnight, like from midnight broker time for a few hours anyway, there's not really much action in the market, and that is the start of the day. So we're looking at so one candle here is the start of each day. So we're looking at here, we can see a pullback, for example, right here, where there was 3 consecutive days of short, and then a swing, a turnaround, and a close above the 9 EMA. This would be my entry point if you're on a trending market. So we will look at stop loss below the swing low, which this is for gold, so that is 13,000 points. And if you're trading on a daily basis, you can actually move or trail your stop loss each day as well as you're going through and checking your trades. So I would put on the trade here for, let's say we're doing 1% per day, and leave it running until the price closes below the, you can decide for yourself, below the yellow EMA or below the blue EMA. In this case, we would have got, if we closed below the 20 EMA, we would have got a 1-to-1 trade, so that's a 1% win. If we let it go until it closed below the 9 EMA, we would have got 20,000 points. So that is about, let's see, it's almost a 1.5, not quite. Now for someone who is in United States Eastern Time, I think the Asian session would actually occur in the evening for these guys. So just checked online to see what time the actual sessions are for someone based in the New York time zone or Eastern Standard. The Asian session, or the Sydney part of the Asian session, the Sydney session in Australia, is from 5 p.m. Eastern time. And I think the time zone is different. If you're in Pacific time, that's 3 hours later, so that would be 8 p.m. Pacific time. So if you happen to be in that time zone, this is actually a perfect time of day for you to set up your swing trading. Say example, if you live in the New York time zone, you get home from work each day at around 5:30 or 6 o'clock. You've only just gotten to the stage where the Asian session is just opening, so you're getting at the beginning part of the candle. So the previous day has already closed, and that gives you the opportunity then to select your trades. And what I would do, and what I do if I'm swing trading, is go through each tab each day and look at multiple trades. And I'm just going to flick through some of them now and see if I can actually see some setups where I would enter in. So we can see here on the CAD, we've got the price has just closed above the 20 EMA, and the 9 EMA is moving up. And decide for yourself if you want to get in early. You could actually place your trade here already. We can see here that it's starting to look like a reversal. We've got a downtrend, and the candles have actually closed above this and also above the EMA 20. If we were to enter right now at today's candle or the opening of the next candle, we're looking at here of, let's see, around about, we can say roughly 200 pips. It's probably about 190. And you can put on there a profit target if you want of 1.5 or 2 to 1. You can also aim for, if you look to the left, you can look at a previous area where you may be able to aim for a profit target. So maybe this area. And that is a little bit more than a 1-to-1. So if you put on a 1% trade and you got to this stage, you would be up by 1% already. If you wanted to, you could close half of your trade and leave the other part going, or you could close 80% and leave 20% running until you may get a really good run like this where it goes for a couple of months straight up basically. So if you can do that, that would be a perfect opportunity as well. So the thing is, go through each day and look for a setup. We can see here we've had a pullback we've had a change of direction. For starters, this was actually last month, so in between these vertical lines is actually a month of trading, or roughly 20 trading days, 20 to 23 or something like that, depending on the month. So we can see here we've just had a pullback to the 9 EMA and a close above it. This candle actually closed with a short, but that actually is a good opportunity to get in because it gives us a smaller stop loss for a better entry. And where to put your stop loss for this particular trade, let's see, I would probably say that below this small swing low here was a little bit short. That's around 62 pips. Perhaps below this swing low would be better, 162 pips or 160 pips, and then aim for, let's say, 160, 320 would be a 2 to 1. So depending on your strategy. So that's two setups we've seen so far. So keep going. We'll ignore sideways markets like this. And this one I think is a little bit too sideways as well. Okay, this one looks like a trending market. So we have a pullback here to the 20 EMA, two days of shorts and then followed by a long. However, this wasn't a very convincing long candle. It would have been better if this was maybe an outside bar or maybe a pin candle. So I wouldn't enter this one at this stage. I'd maybe wait for another day. If it closed above these highs perhaps, that would be a better entry. And that would give you about 150 stop loss. So currently have two setups, and okay, this looks like another setup here on the pound New Zealand dollar. The stop loss on this pair is usually higher, so it's around 350 pips, but the moves are big as well. Like this is like 800 pip move to get to the previous highs that we had from about a month ago. So the same thing, 1% per trade, so that's 3 trades we've entered so far today. This could be classed as another one. We've had 3 days of pullbacks and then one long candle. We have a 300 pip stop loss on that one, so that's maybe 4 trades we could take. This one's a little bit sketchy, and nothing for here. We've got now this one, the Euro USD, this could be a pullback or it could be a change in direction. So let's watch for another day or two and see if the 9 EMA closes below the 20, then we'll be looking at taking this one short. But this could be something similar to what we saw here a bit over a month ago as well, where we had a pullback to the moving averages. That's about 230 pips, and then a close above, which actually went up again. So it's only about 100 pip stop loss, and the move was 700 pips. So, this could be another pullback, just to watch and see. Wait for a confirmation before entering that one. Okay, here's another entry that we would probably take. We had 3 days of shorts, a pullback to the moving average, and then a close above. And with this, we missed this day. We would have actually entered at the beginning of this red candle, so the close of this green candle. But that would have been about 230 pip stop loss. And yeah, then again, just ride it until, and trail each day perhaps if you wanted to. Decide when you want to get out. That's up to you, your exit strategy. Okay, this looks like a change of direction here for the euro pound. If we were to enter this one short, we'd have a 70 pip stop loss, and we could aim for around about these lows here. We've got about 120 pips, so not quite a 2R, but at least 1.5R. So I think that's about 5 trades I think we've got so far that we could have entered into. This one looks like it's almost set up, ready to go. Maybe wait for one more green candle to close before entering in. That's about 130 pip stop loss. Okay, this looks like a reversal, the Euro Aussie. So that's about 120 pip stop loss if we got in at this point, and target would be about 440 pips. We'll be aiming to target these lows. So that's maybe about 6 trades we could have taken today. Here is another possible setup. We've got, if you want to take this one, we've got a, the entry point would have been here, so at the close of this green candle, with a stop loss of about 170 pips. At the moment, we would be only around break even, so we've had one positive day and one negative day, but pullback. So we wouldn't be in debit at the moment, but it will be around the break even mark, hoping that this would continue to carry forward, go up further. Here we have another one, which is a reversal. We have a double bottom, which has happened over a 2-month period, and a positive green candle, a pullback to the EMAs, which is even better after closing above these previous highs here. That'd be a perfect entry. We're looking at around 120 for the stop loss on that one. That's about 7 trades. This is almost a setup on the Aussie. We've had a pullback to the moving averages, but this green candle is more like a doji. It hasn't actually closed with any positive signs. If it closed perhaps above this candle, this previous candle here, we would have actually entered in with about a 90 pip stop loss. So watch for one more day on that one. If it closes ahead by one more point or one more positive candle, then we would enter long in that one. So at the moment we've got about 7 trade setups that we can see. Here's another one, the Aussie New Zealand. That is about a 70 pip stop loss or 68 pip stop loss, and target, we could target a 1R 1-to-1 here, or we can go for a higher one here if we wanted to put in a take profit straight away, or you can just trail each day and then close manually when you get across of the moving averages. Here's another setup, the Aussie Japanese Yen. Stop loss on this one would be around 120 pips. So could probably get a 2R or even more out of that one. If it continues to go up, we might be on a long trend. Be great if you catch some of these trades at the right time and get some of these big moves, like 1500 pips or 2000 pips. That would be awesome to see. Here's another setup here. We've got the Aussie Swiss franc has just crossed over the EMAs. We've had a pullback to the EMAs and then a close above. I would probably like to see one more green candle close above these, possibly up around this area or higher. So maybe watch that one for another day, but that would give us about 100 pip stop loss. The Aussie CAD is the last one on my list, so that is all of the pairs. We're looking at a setup here as well. We've recently had a cross of the moving average, and I love to see after a cross a pullback to the moving average, either 1 or 2 candles, and then a reversal again, so a small swing low. So we've got a large swing low here and then a smaller swing low here, and then the entry would be so this one's only got about 55 pips for the stop loss. You might want to go below this particular swing low and enter this point instead. That will give us about 130 pip stop loss, more wiggle room, and that's about a 1.5R if we target these highs. So that's it for today. I hope this has given you some sort of an idea how you could trade swing trading anyway. But if you trade all of these pairs, 28 pairs plus gold, you're looking at, we had about 7 or 8 setups just today that we could have actually entered in. So depending on your risk, you could maybe risk 0.5% per trade and just trail them until we actually get a close above above or below the moving averages, like another crossover. Look for exit points, or you can trail below each daily candle. And the way you would do that, just finding a good setup if we can to show you what I mean. Okay, here's a good idea. If we are trailing behind each daily candle, so each day when you check your trades and you're putting on a new trade, we can have a look at let's see, so we've got a pullback and our entry here. Let's look at this one. So we've got a double bottom, we've got the moving averages cross over, and just say we're entering on this candle, we've got 280 pip stop loss, but we had a long run of days in the same direction. So we've got, let's say we entered here, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9 days of profit before we actually would have got stopped out. And the way we would have done this one is each day when we check our charts to see if we've got a new trade set up, if we're in the current trade in this particular pair and the candle closes green, we move the stop loss to below the previous day's candle. So each day we will be putting a stop loss at this level, then move it up to this one, move it up to this one, move it up again, move it up again, move it up again. At this point we would have got stopped out. So at the end of this green candle, we closed here, we would have entered at this point. The stop loss was right here. We would have lost only 76 pips on this particular day to the stop loss. So the 76 pips would have been the stop loss, but we would have gained, let's see, 620 pips on that particular move. So you can see there that if you put on a 1% trade on this one, we would have made about 3R roughly on that one. So 1% turned into 3% over a few days, but trailing each day. That's probably the way I would think about exiting the trades. The other option is wait until your trend ends and you get a pullback that closes below the moving average, exit at that point. Okay, so that'll do for today, and I hope you found this information valuable. Please leave a comment what your thoughts are on this trading strategy for swing trading, if this is something that you could do, or if it's something you have done and what sort of results you've had in the past. The best that I've had using this strategy was 17 consecutive wins. So, you can actually get a really good run by using this particular strategy. And by looking at trending markets as well and skipping anything that's going sideways, you're giving yourself better odds of actually winning. So hit the like and subscribe. Watch out for more of these videos coming out soon. And if you have any suggestions, something you would like me to create a video on, if it's something that I can do, I will do, and maybe help some guys out with some trading strategies. Thank you.